Morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST. Every day of the week, we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the price action of the market, which is not too good. Not too good today on this Monday morning. Not too good over the weekend. Some huge losses across the board. But we are here to discuss it all with you, commiserate with you, maybe give you some hope, maybe come up with some strategies. We're going to get through all the different issues. And I think there are quite a few at the moment, to be completely honest. We've got on the list for discussion today, number one, Jump. Big market maker in crypto kind of exiting their huge position. Obviously, the crypto prices are down. We'll talk about that. Number two, the Japanese yen situation. You might have seen a lot of stuff going on there. We'll cover some topics there. Number three, the US unemployment data, the rate cuts, the kind of depression that people are kind of talking about at the moment. We'll touch on that. Number four, the Iran situation, which seems to be the Iran-Israel situation, which seems to be escalating. We will touch on that. Number five, Kamala Harris's increased odds versus Trump. And finally, number six, notice that Warren Buffett is going into cash, been selling a lot of his stock. So all kinds of very significant global stuff going on at the moment. We want to bring all these things to your attention, but we are by no means experts in any of those things, to be completely honest. So we're just going to be going through them, giving our honest opinions, giving the factual information that we think will be helpful to you to make your own decisions. And that, with that, the final disclaimer, as always, that nothing that we say is financial advice, because we don't know anything about this for sure. This market is exceptionally risky. So please proceed with caution and exercise your own judgment. With that out of the way, Bread, big show today. Do you want to? How big do you
Hey,
think
buddy.
this show is? You feeling like it's gonna be a big show?
For for context, so first of all, well, you're not going to get me. You're not going to absorb me into this price go down narrative, like energy level go. Like that's not me. All right. So, and for context for the room, VCheck hit me up. He hit me these storylines. He's like, man, big show today because obviously numbers are down. Attention goes up when number goes down. Attention goes up when number goes up. So fast movement means more attention. But for me, I was like, why is today a big show? I don't know, and that's because this is in my wheelhouse. I don't deal in numbers. I deal in the tech, and the tech is the exact same as it was 3 days ago, as it was 10 days ago, as it was 15 days ago. So
The tech
I
is
spent the
markedly
weekend.
worse today, Brad.
The
It
number
is
go up tech
markedly
is
worse.
not great right now. I'm gonna be honest. That is very true. It is markedly worse. But yeah, like I spent the weekend. I booked for Singapore. Done. I
Yep, I did that
I
as well.
I compared a new L2 gaming L2 I heard about to other ones. It sounded redacted. I don't think it seems kind of scammy to be honest. So I did that. Uh, it's just normal stuff. I don't look at the numbers, man.
Like the perspective, Bread would absolutely not take the bait in our private message this morning, pretending like everything was completely normal. Which on some level, the tech is, as he says, exactly the same as it was yesterday. However, the prices are not. And as I mentioned at the top of the show, there are six factors that I've identified that I think it's helpful to bring to your attention today because they're things which I think are having a big impact on the price, at least not on the tech, but definitely on the price. So we'll get through all of those in just a little bit. But before we do that, let's hit the snapshot headlines, which is not pinned up top. I will do that in a minute if Bread isn't able to. I don't know if you got your phone with you, Bread. Um, I'll do that in a bit. But let's hit the price action first. I'll share the screen for people who are watching in. Remember, we're live on X video. We're live on YouTube as well if you want to watch in. Um, Oops, I'm sharing the wrong screen. I'm going to share the correct one here.
And I'm not going to leave you hanging. I'm going to throw my hat in the ring on all of this stuff, even though I'm unqualified to do so. So don't you
Good.
worry. At the
That's
Crypto Spaces host.
that's the plan. That is the plan. So starting with some price action. God, this is bad to be completely honest. Bitcoin is down 16% in the last 24 hours at 51K. Ethereum is down 22% in the last 24 hours at 2.2K. And Solana is down 20% at $114. Just for broader context, in the last 7 days, Bitcoin is down a quarter, ETH is down 33%, and Solana is down 40% in the last 7 days. So if there's one small victory for all the ETH lovers out there, you are finally not underperforming Solana on one metric, given that everyone is so concerned about ETH always underperforming. So everything down across the board. As you said, we're going to get into all the reasons why that might be the case. Getting into the headlines from the snapshot, which is pinned up top. First, crypto bloodbath majors are down across the board. CoinDesk had this to say. We're going to get into this article more in a second. Over 275,000 individual traders were liquidated. Largest single liquidation order was on crypto exchange Huobi, where a BTC USD trade worth $27 million. The data shows that some 87% of all traders affected were long traders, or those that bet on higher prices. The liquidations came as Bitcoin slid more than 11% over 24 hours, while Ether plunged as much as a quarter. So absolute carnage across the board. Number two, in terms of the crypto side of things, as I said, there's more important global things happening too. We're going to touch on all of it today. But the huge market maker Jump Trading appears to be liquidating its crypto business, sending 90,000 ETH to centralized exchanges over the last couple of days. Some further information there in the past 24 hours. A wallet identified as Jump Trading's has transferred 17,576 ETH, over $46 million to centralized exchanges. So that's a hell of a lot of ETH being sent to centralized exchanges in order to be sold off. In terms of notable sales, we'll actually look at this in a second when it comes to the NFT market. We had a CryptoPunk sale for as low as 20.5 ETH. It is this one that I'm showing on the screen. CryptoPunk clown eye, a blue clown.
What happens when you run for the door? That's what's going on. You had someone run for the door and they did not care.
Yeah. So the bid now on Blur for a CryptoPunk for the first time in I don't know how long is now sub 20 ETH, which has not been the case obviously for a very, very long time. So those are the headlines. That is the immediate price action. Before we get into a bigger discussion on the 6 main topics, which I said we're going to touch on today, let's just get into the NFT market with our NFT market-based partner, Mintify. I mean, there's not a better story to share here, I am afraid. Everything is down quite aggressively. As I said, CryptoPunk's floor is now down to 22 ETH. Bids are under 20 for the first time. And I do think CryptoPunks is a reasonable place to go to gauge sentiment in the broader NFT market still. DGOD's down to 0.65. Let's see. Pudgy Penguin's down 8% to 7.5. Milady's down a lot, actually. They were as high as 5 before. They're now down to 4 ETH. Captain's finally below 2 ETH as well. Bored Apes, actually, compared to everything else, Bored Apes are holding steady. Will not break 9 ETH. They're basically flat, whereas the rest of the major NFT collections are down. One of the reasons why that's the case, I'm going to share this on the screen for people who are watching. I know that people find this helpful because I did a NFT lending breakdown before and people thought it was very, very helpful to explain what's going on behind the scenes. If you look at the Bored Ape lending chart, again, I'm showing this on the screen. I'll do my best to describe it verbally for the people who are listening in. But this chart is like a very, very healthy chart. For the people who haven't heard my description of this before, what you expect to see on a lending chart is the more that someone is borrowing, the higher the interest rate. So it should be like a healthy kind of arc upwards. You know, as you can see from this chart, there are a few loans that are underwater, which means that the borrow rate is higher than the current floor price, but it doesn't look like those loans are on the way to liquidation yet because the lenders, or no one has cancelled the loan. And if there are going to be any liquidations, there's not that many. So that is a very important image for you guys to be able to see. It's an important understanding of the lending market, which is going on behind the scenes. Now, contrast that with the Pudgy Penguins lending market at the moment. You will see a significant amount more of leverage in the ecosystem in general. So that's the first point. You can see interest rates. You can see loads and loads more loans which are being cancelled, which means that the way that Blend works, when someone cancels a live loan, it goes into an automatic refinancing auction, which means someone on the market needs to come in and step in to take the loan. Otherwise, the NFT will go to the lender, and then they don't want the loan. They don't want the NFT, do they? They just wanted to give a loan. So they're just going to sell it into the market, which causes cascading liquidations. So what you can see here with just the gray dots are all of the loans which are now currently seeking a new lender. And if I scroll through all of these loans, I mean, Brad, you can see this. There's got to be, I don't know. What's your casting an eye over this? What's your estimate of how many loans you can see here that are looking for a lender?
Or what about the 40s, 50s there?
We're still scrolling, and all of these are 90% LTV. So no one's going to take those, right? No one wants to give a loan at 90% LTV. Pardon?
And those are all within a day as well? Or
Yeah.
that's
So
2 days length alone?
So the way that it works is you've got a day now for the interest rate will keep increasing and increasing over 24 hours. And hopefully, this is the thinking, the higher the interest rate, it will attract a lender to come in. And if there is no lender, it will then go to the former lender, who will probably liquidate the asset. So look, I'm still scrolling here, 85% LTV down to 80, 70. I think there's at least 100 here. Just off the top of, like, if you can see from what I'm scrolling. So huge
just some historical context, this has happened before with other collections, right? David Choi stepped in at one point in time whenever there was a crisis coming. He put up a bid, it brought in a bunch of confidence. Same thing with Cyrus, right? Like, it's a combination of, like, you don't have to have enough capital to like counteract the coming issues. You just have to have enough capital to instill confidence in the market to kind of help them step in, right? So this has happened before. Obviously, the collections are still here. What was the outcome before?
Yeah, so this happened before. In fact, not very long ago, right? On the days when the liquidity got pulled from Blur, and remember when the incentives stopped and people thought, okay, all these liquidity providers are going to leave, it caused this big lack of confidence. How's the market going to react? And so this happened to Pudgy Penguins. I think they dipped beneath 7 at one point before people stepped in and said, you know what, this is too low for a Pudgy Penguin anyway. We're happy to provide liquidity for loans here. Or we're just happy to buy them because this is now too cheap for them. So as you say, very good point. This has happened before. But I thought it was definitely helpful to draw the comparison between the leverage in the ecosystem, which people don't always see on the timeline. And if you contrast it with Milady's as well. So, Brad, an interesting comparison here is the Pudgy Penguins chart. Although there's a lot of leverage, you can see the shape of the chart, right? Where, broadly speaking, the higher the borrow amount, the higher leverage. So you've still got an arc. There's a lot of leverage, but you've still got this arc. What you see in the Milady chart is actually, it's kind of just high interest rate. Can you see what I mean? There's just high interest rate loans everywhere. Like, whether it's
they're guilty of doing some recursive stuff, right? I know in the past that you've seen the ladies liquidate each other because, hey, there's one guy who isn't Milady who went and took a bunch of Miladies, leveraged them, and then bought up a Malads or whatever, and then the actual Milady community went after him because they thought it'd be funny, or it's very Milady of them to do it, and like, so that this is something that's happened before. And I imagine if you're someone that's doing that, you're probably a little more or less sensitive to the actual interest rate because you're trying to achieve something like that, right?
Yeah, I think that's fair. So look, definitely wanted to provide that behind the scenes kind of insight into the NFT market and the lending market, which is obviously it is no less confident at the moment than any of the other markets, because there seems to be a lack of confidence in general. But as I said, we're going to get into some of the reasons why everything's happening. I've identified 6 for the people who've just joined us. For the course of this show, we'll try to touch on these 6 things. Number 1, jump trading, kind of liquidating their crypto exposure and the general crypto majors going down. That's number 1. Number 2, Japanese yen situation, to understand what's happening with the increase in interest rates over there and how that affects everyone else. Number 3, we'll talk about the US unemployment data, which came out, and the kind of depression fears for Israel-Iran situation. We'll touch on that too. 5, Kamala's increased chances of winning from some sources, but we'll compare that with Polymarket too. And 6, Warren Buffett, famous investor, going all in, or not all in, but selling a lot of stocks for cash. So 6 things we'll be touching on today. Just to repeat what we said at the top of the show, Brett and I are by no means experts in global macroeconomics, political, geopolitical.
Speak for yourself. I actually just started reading the last 20 minutes, as does most of CT. So I am now a professional in any topic you bring up. So I just want
Okay.
that be known.
Right. So I have because I haven't been able to read for 20 minutes, I cannot profess to be that, but Brad has got his PhD in global economics. Okay, let's start at the top. People care. We're a crypto show first and foremost. Let's start with crypto prices, Brad. The kind of main headlines coming out of the more crypto native stuff in the last over the weekend was how the majors are down aggressively, but the kind of crypto native reasoning was a wallet supposedly associated with jump trading moved 17,500 ETH to centralized exchanges, according to Spot on Chain. A bit more context from the CoinDesk article, and I know you'll have some thoughts on this, Brad. I know you're a bit of got your PhD in on-chain sleuthing as well. So in the past 24 hours, a wallet identified as Jumps transferred 17,500 worth over $46 million. The wallet has moved nearly 90,000 ETH to exchanges since July the 25th. So that's over the last couple of weeks, and still holds 37,600 wrapped staked ETH and 11,500 staked ETH at the time of publication of this article. And I think this article went out this morning. And so some commentary here. The reason for the crazy crypto sell-off seems to be jump trading, who are either getting margin called in the traditional markets and need liquidity over the weekend, or they're exiting the crypto business due to regulatory reasons. So as we said before, there's many things going on at the moment. It's not only jump trading that is the cause of the sell-off across all markets, but this is one of the reasons. So that's why we're touching on it. Brad, going to come to you straight away. What are your thoughts here on Jump and Jump's exit?
Yeah, so a little context on this one. The speculation is that Jump was investigated by CFTC, I believe it was, and shortly after that, they started being much more active on chain. And yeah, all weekend they were firing like 10 to $100 million clips of ETH into exchanges from across all their wallets. Not all of them were tagged on Arkham. I made a little bit of post about it because I saw at one point they moved like $5,000 worth of SHIB to Coinbase, which is funny. Kind of like, Suzu's come up recently too, where they're like, oh my God, this guy used to trade billions, and now he's like got a $10,000 position on a fucking nothing, right? So it's kind of funny. So, anyways, looking at their wallet, and I posted that other people brought forward some of their other known wallets that they've been tracking, and if you add those to their actual identity on Arkham, you can see that like actually they've got a lot more money. I think it's somewhere upwards of $700 million roughly on chain. A lot of it is in deep like LSTs, LRTs inside the Ethereum ecosystem. So I know everything feels bad now, but it's probably about to get a lot worse. So that's the
what's
case.
your thinking then on that, Brad? Do you think based on do you think based on what you've read and what you've seen that it does look like Jump are definitely exiting? It feels like obviously that this wallet's being tracked. Obviously they've sold a hell of a lot at the moment.
Yeah, I mean,
But it
it's
feels to
hard
be
to
like
argue with
it's
this.
rumors that they're exiting. It's not like there's been an official statement as such, I don't think.
Yeah, I
What
mean,
are your thoughts?
it's all sleuthing, right? So it's
Sure.
only thing that we can or tell is based on their on-chain movement from known wallets. We can't see what they're doing once they send it to exchange. The thought is send to exchange usually indicates the desire to want to liquidate or go to a cash position. Now, Jump already has a lot of on-chain stable coins, but yeah, they're all of their non-stablecoin assets, instead of doing it on-chain and swapping out for stables, they're sending it to an exchange. Now there are some other exchanges, and like they're even hopping between known addresses on exchanges. So you'd see like a deposit or a hot wallet from Binance going to a known deposit address on Bybit, right? So like there are a lot of known addresses across all of their different places that they've played are touching each other. So we can't say definitively, but based on their actions. It's pretty consistent. Like I said, hourly, minutely, their entire portfolio of known wallets is moving towards exchanges, which historically has meant we're going to try and sell that stuff. It's the same flood that we had um, with the U.S. government moving all their Bitcoin recently, right? We don't we didn't know what they were doing. They just moved it, and that we don't even know where they moved it. Some people were saying that the tag wallet was a known Coinbase deposit address. Others are saying that's just another one of their addresses. But people moved it so the market says, oh, well, this is the reason why. Because remember, price is always backwards looking, right? So price goes down, we have to ask ourselves why. We start assigning
Yeah.
it to shit that we're seeing, and we say, well, that's a lot of money moving right now. Of course, that's probably part of it. And then, we say, of course, they're selling. So yeah, we're just inferring based on-chain stuff. There's been no formal announcements to my knowledge.
I think that's fair. I think you mentioned right at the beginning there was a CFTC investigation going into Jump at one point in time. I mean, obviously, I was around in the previous cycle, and they were very prominent then. I just wondered more from a personal perspective. Did you have any opinion on their participation? I know they've been, obviously very important from a financial perspective, but they have also uh, come under a lot of criticism, and maybe some people are not too glowing in their praise for the
Yeah,
tight kinds of things that they've been up to. Do you have any particular perspective on that from your experience?
the one thing I've learned is that like the longer you're in this industry, the more no one has like a totally clean slate. Because like you hear
Mm,
the same stuff about CZ, right? CZ,
sure.
depending on who you talk, like they're like, well, back in the day, he used to do
Yeah,
some
yeah,
like
yeah.
shady shit with like XBF and all these other people. So like, but now he's a paragon of the ecosystem, right? So like, there's very few people you can talk to that have been here for a long amount of time and have been held or custody a lot of money that are like squeaky clean. So it's all depends
Sure.
on who your sources are. So yes, they've been a known entity in the market for quite a while now. Everyone would call them a native, crypto native trading prop desk, but like, yeah, it's hard to know definitively without being in those conversations if they're like seen as a good or a bad person. But yeah,
Mm, okay. Yeah, look, I think that's fair. I actually think that's
I
really.
checked the numbers by the way; they're still moving. Like as of like 13:40 minutes ago, 52 minutes ago, an hour ago, they're
Oh,
sending
really?
hundreds of thousands of dollars in ETH um, to
Mm,
exchanges, but also from hot wallets to on chain. So like it's going both ways.
interesting. Okay. That's very helpful to know. It's still an ongoing situation. So, as Brad said, from pure on-chain sleuthing, not knowing anything guaranteed, feels like it could, at least that proportion of the negativity and the sell pressure could be continuing for ETH for at least a period of time. Um, just a final point on that, Brett. I thought it was a helpful perspective to. It's very, very easy to, at some point in the future in crypto, look back at people and say, "Oh, they were a these are the words I heard people describe them like they were a parasite in the space. They did this bad, they did that bad." But I definitely know what you mean, and sometimes I wonder whether it's possible to build any empire. Like at the start, the construction of any empire seems not necessarily necessitate, but there seems to be some shady things that people might need to do towards the beginning, which, later on down the empire,
Mm.
you try to clean up. I mean, I'm just talking from Peaky Blinders
Yeah. Although Brian
experience.
Brian Armstrong's done well, right? I don't like he catches some shit because he used to be a Bitcoin maxi, now he's not. So
Yeah.
like he gets some of that. But otherwise, I don't know. I don't know that I've heard anything that's been like he does things under the table as opposed to just like they're mad they don't pump their bags as much, which is always going to happen.
I both like it that you gave the Brian Armstrong example, but also kind of sad because maybe I was trying to find justification to go on some kind of Peaky Blinders arc as we build the
Which is
modern
great.
market out bigger.
I mean, I'll
So
start spreading rumors if you guys want to. Like, I'll get producer about you guys.
okay, we'll explore that. We'll explore whether we take the Peaky Blinders route or the Brian Armstrong route. Those are the two options available to us. Look, we've dealt with the jump stuff, which is definitely one of the 4 or 5 things happening at the moment. Next, um, we want to talk about the Japanese yen. Um, I've got a helpful BBC article which kind of touched on a variety of things because obviously the global economic situation is fairly complicated and some of them are intertwined. So I'm going to share some of the information to get you up to speed with everything that's happening from that perspective, and then maybe we'll take some of the pieces apart to understand what's happening. So I'm going to share the screen for the people who are watching in, and then we will dive into it further. So as you know, global stock markets are also sinking. It's not just crypto that is sinking at the moment. Um, so one of the reasons given for this is the weak jobs data in the US on Friday. So that was one of the things that started these things off. But also what was happening is that the yen, the Japanese yen, has been strengthening against the US dollar since the Bank of Japan raised interest rates last week, making stocks in Tokyo more expensive for foreign investors. What that meant is that stock markets, one of the consequences is stock markets in Taiwan, South Korea, India, Australia, Hong Kong, and Shanghai all tumbled. And at the same time, the US Federal Reserve held off cutting interest rates. So that was another thing that was happening. The US Federal Reserve did not cut interest rates when maybe people thought that they would. They did not. Other central banks did. For example, the Bank of England did a small cut last week. And then also on the back of that, there was this employment data which showed that US employees added 114,000 jobs in July, far fewer than expected. Some commentary here from some analysts, maybe stating the obvious. There are just some signs that potentially the market is slowing down a bit. That is maybe potentially an understatement. I think that also spooked some people on Friday, and you're also seeing the Japanese market was already closed when that happened. So you're seeing Japan react to those things that happened last week. I had this really good explanation from John Woo. For the people who don't understand like why this Japanese trade has such profound impacts on the rest of the market, I'm going to go through this thread from John Woo, which explains it very, very nicely. So it'll take a minute or two to explain, and then we'll get into a discussion on it. So he starts off by saying, and I'm showing this on the screen if people want to read along, it seems unintuitive that a small 25 basis point interest rate hike in Japan would spike all risk assets, including tonight's 20% ETH down candle. But you need to understand the way the carry trade works. It's a leveraged unwinding. So this is the explanation. The quick explanation of the carry trade is borrow at zero rate and invest in something with higher than zero expected returns. Remember, Japanese interest rate has been zero or nothing for like a very, very long time. The economy in Japan has been struggling in general. So it's been very, very easy to borrow yen. So there are three steps that Jonathan says that people have been doing. Number one, you borrow yen for nothing because the interest rate was zero. Number two, you buy an asset outside Japan that yields more than nothing. Then you just profit. So that was a relatively straightforward trade because you're getting this cheap money and then you're earning money on your cheap money. The same behavior happened during the ZERP era. Take a margin loan out against your equities at a 2% variable rate and buy an Airbnb with it that yields 7%. So 7% minus 2% equals 5% of free money. Well, at least that is the thinking. Obviously, there are complications when things change. So this is what Jonathan explains next. So yes, that does work so long as your borrow rate remains low, your collateral is worth something, and the thing you bought with your loan actually makes the money. And what he explains is all those things are becoming not true for the carry traders. First, in terms of the rates, the Bank of Japan is being forced into tighter monetary policy to protect Japanese people suffering under inflation. So the same killer the Fed was forced to confront when it raised interest rates at a historic pace from 2022 to 2023. So that means an already weak yen was making it hard for Japanese to buy foreign goods, a very tough spot to be in for a resource poor country that imports most of its goods. So in order to combat the inflation, the Bank of Japan has raised rates. Recall that interest rates are the price of borrowing money. So if you want less money in circulation, you raise the price of creating the money. However, to the carry traders borrowing yen in order to buy foreign assets, this is death because they own foreign currency denominated assets against yen denominated loans. So for someone who owes yen and owns USD, this is not a good situation. Higher interest rates exert upward pressure on the yen's value. First of all, they create direct demand for more yen because now the yield on yen has gone up, strengthening the currency. More people want to buy and hold it. Secondly, it increases the cost to borrow. Higher borrowing costs equals less borrowed yen equals less supply and more upward pressure on the yen. So the yen has spiked in value, and the inverse measure, the USD JPY, has fallen dramatically. And because the yen is so much stronger now, anyone who is borrowing yen now owes 10% more in USD terms just over the last few weeks. So it's a double whammy for yen borrowers because first, your loan outstanding is higher and now your interest rate is higher. So the result caused some traders to sell their assets and repurchase yen in order to pay back their loans. But that buy pressure against the yen sends it even further higher, which forces more buying, resulting in a liquidation cascade. And that's obviously why the Japanese stocks have been going down too. And then he kind of explains that it's funny in crypto we see these reflexive dynamics play out over and over again, but now we're seeing it in this kind of in this bigger market. So I think what was interesting as a kind of final conclusion here is he said this is why the risk assets are taking a tumble. The hidden leverage in the system was the infinite money glitch that was the Japan monetary policy, because I guess in his opinion, we can't quantify this necessarily, but in his opinion, there was a significant amount of capital using, borrowing yen at basically nothing, plowing it into any other risk asset or even like a less risky asset that's just earning more than nothing. But now that infinite money glitch is that window to do that is closing. Brett, that's the explanation. I think that was very, very helpful. It helped me grapple with it and kind of come to terms with it a bit better. What are your thoughts on the explanation? What's your understanding of it? And how are you thinking about the situation?
So one, that is a very good description. But two, like it for me as some like a non-participant in that market, like cool, that all makes sense. I can't refute any of it because again, I'm not an expert in any of that stuff. What's crazy to me is all of that stuff, very complex, macro, like totally outside the realm of this. It made me think of the meme of like the dinosaurs sitting there talking to each other. Like, how does this impact my cat JPEG coin?
Mm,
Right? Like you have an asteroid in the background that is like this very high level macro thing that's totally outside your realm of consciousness, right? Like 99.9999% of this space is going to have no idea what's going on with that,
mm.
myself included. And then you're just like, try drawing a line between the Japanese yen carry trade all the way to like, is a meme super cycle the thing, right? Like, are L2s like more like the growth sector versus L1? Like, you can't do it. There's so many points to connect those two things that it's easier for me to ignore it, frankly, because I can't control it. But like, very good description, awesome. Can't fact check the dude,
Sure.
unfortunately. But it makes
It,
sense, right? Like,
it kind of works conceptually though, because I have to admit, before I did the reading, and I actually had a YouTube video that I watched on it a little bit earlier as well. I think if I was to zoom out and take away the Japanese element and like where, forget the origin, forget certain bits of the technicalities, I guess in essence, what is happening is there was just a source of kind of almost, it's not irresponsibly cheap money, but it's just unusually cheap money, which
of course, yeah.
allowed other people to uh, park that money in a variety of places. And one thing that I heard on the YouTube video explaining this after is that when one of those opportunities arise at the beginning, obviously there's less people doing it, then other people realize that this is like think of the terminology that was even used there, an infinite money glitch. But then the thing is, people enter that in more with more leverage because they start to think this is an infinite money glitch, which means that when the cascade of liquidations happen, they're usually worse than otherwise.
You know
Um,
what this emphasizes for me? How much more
what?
fun crypto is than traditional anything, right? Like
Why?
well, I'm just saying, like we keep seeing these same concepts show up all over the place, right? We talked about people civil farming, like farming space in the U.S. to get additional loans against the government to build profitable, so all of these same strategies that we like deploy in the crypto space we understand and conceptualize and can map them. Like, yeah, like this concept is totally an understandable concept because we see this exact same behavior because we're all humans inside the crypto space. It's just much more fun when it's against JPEGs and like silly lending protocols named after like fucking food, right? Like it's the turnip farm, whatever, that people are going crazy doing loop leverage on to be able to do the thing. So like crypto is a very useful financial learning tool because it's much more entertaining but it is still raw human behavior, which is the exact same thing this is for the exact same reasons you described, right? Like, yes, the market found a money glitch or they found something that could give them advantage. They got off sides on it because that's what humans do. They get greedy and then now they get checked for whatever reason. There's a counter to whatever happened, which means people are out of position, which means they have to now unwind it. And it's just the scale of things are a little bit different because you're dealing with the actual currency of an entire nation versus like again like bunny swap and friend token. But the concepts are the same, and I think that's what's useful about crypto is that we learn these concepts without having to dig into super heady global macro things that are frankly a little bit more boring. So +1 for crypto.
Like it. Plus
I'm
one
gonna put
for
a positive spin on everything. I'm not gonna let you get me down or anyone this week, frankly. So anything you do, I'm gonna spin into a good thing for us.
I like it. We'll have both the negative and the positive. So we've touched on the first two main things. We talked about jump. We talked about the Japanese yen situation. I hope that was a helpful breakdown. Kind of touched on the unemployment data. We had an additional tweet from OSF kind of talking about whether obviously the Fed decided not to cut rates last week. That seems to be out of step with what people were expecting. And now this kind of talk of potentially an emergency rate cut, an emergency meeting. I believe that there is one scheduled. I would need to double check that. But Ovi tweeted this morning. Also, he said the next FOMC is supposed to be in September, but I'd be very surprised if they didn't do one this month now, with a view to an earlier than planned rate cut. His thoughts were might be a great dip to buy knowing the Fed could start getting aggressive on cutting, or does that just spook the markets even more? So that's one of the questions out there. One of the questions I've been thinking about, Brad, I don't know what the answer to this is, but when I've been speaking to people on crypto in general, is to what extent do we just always correlate with rates? Basically, like it isn't the thesis at some point in time, ideally in these types of situations, we would be less correlating if we are the type of asset that we thought we are. And I know that someone brought up on the timeline, brought up gold, saying like, look, if Bitcoin's meant to be digital gold, it's certainly not trading like gold in any way at the moment because gold was up just a touch and Bitcoin is not up just a touch. Do you
Yeah,
have
what
a
the fuck's going on
perspective on
with
that?
Fink? Remember, Fink literally just said, "Go or Bitcoin is the asset that you buy for fear or whatever," right? Like that, you hedge the market for fear. You buy
Yeah, I know,
fear
but
in the
why was he
market for
lying
whatever.
then?
Well, because he's pumping his bags, like we all are. We all like, you know. So yeah, yeah, like that's the dream, right? Is that we are the safe haven for the rest of the world, but until until we're recognized throughout the world as that, like it's never going to be that. It's all psychology, right? And like right now, like it or not, everything on the crypto spectrum beyond like Bitcoin onward is just more and more risky. Like whether or not we think that technology actually is counter to that, right? The technology like, oh, it's a known asset, it's got a supply cap, all this stuff, it's harder than everything else. So we can think those things, but until the market recognizes that, the psychology is that, like, it's never going to be the place where people go for safe haven. And yeah, right now, it's like still we're a risky asset. So we're going to behave like the riskiest of assets, which we are.
Hmm. Okay. Yep. I think that's completely fair. Uh, just to get people up to speed on another one of the escalating situations. And remember, I've said this at the top of the show. I'll say it again. We're mainly presenting these pieces of information to you. We're not experts in it. We're not trying to be partisan in either way. But obviously, the Iran-Israel situation is escalating. I have a piece of news here from Reuters just to get you up to speed rather than give any deep opinions on it. They reported that Iran is not looking to escalate regional tensions, but believes it needs to punish Israel to prevent further instability. The foreign ministry spokesperson said on Monday, following the killing of Hamas leader Ismail Haniyeh in Tehran last week, he said Iran seeks to establish stability in the region, but this will only come with punishing the aggressor and creating deterrence against the adventurism of the Zionist regime. There's some other calls here to calling on the United States to stop supporting Israel, Iran. There's some other commentary here, but I think the broad takeaway is this situation is escalating. I saw some other reports that further kind of military preparations were being made internally on both sides. Brad, I don't know if you have a particular perspective here. My perspective is purely, it looks like it's deteriorating. It's obviously kind of simmered up quite a while ago now, and it feels like the market started to ignore it. It's hard to know actually at the moment what the market is pricing, how the market is pricing like which piece of news, because it feels like this stuff actually started escalating a while ago, and then the market didn't care about it then. And look, we're not talking about it from a humanitarian perspective. We're just talking about it as it relates to markets. But because this is happening and all the other stuff is happening, maybe I just wonder, how much do you think this is part of how much the market is caring about this news in particular versus all the other things we've mentioned already as well?
My God. Like, dude, these topics are so. I could spend my life studying each one of
Yes, I
these
know.
things and still not be an expert at it. My God. Dude. Okay, so you asked me how much. I'm gonna say 15% as an expert in this field on Twitter. 15%. My interest goes to why haven't we seen any coins launched about this stuff? So I am now. I think maybe there's a gauge to be found there. Like if we go to pump.fun and we can index how the amount of coins launched for each of these individual things. Like is there more Buffett coins than there are like Iran conflict coins? And if
Yeah,
that's the
interesting.
case, does the market think that Buffett is the more interesting thing? See, maybe we can reverse engineer human psychology through the amount of tickers launched and the amount of liquidity bought into
Yeah, I
these
mean, I,
things.
I wonder if there's a pump market lines open on this type of thing yet, especially given the politify coins have already become a thing, but they just, I guess maybe this side of the
I know.
market is not being covered at the moment. But look, as I said, we're just touching on these things fairly quickly to bring you up to speed with what's happening there. But we'll keep moving to
I
the other
sympathize for
pieces
you,
of
by the
news.
way. I know you feel obligated to report on this stuff, and like I can just sit here and go come after you and like talk about how ridiculous it is because it is. And anyone who tries to like LARP, like maybe that's my disclaimer for the rest of the people listening today, because you're going to see these same topics come up across
Yep.
like morning shows from here on. Man, like these like Jesus take the wheel. I'm not religious, but Jesus take the wheel right now. Like there's a lot of this stuff is beyond the comprehension of most of the people in the world. Like there's no single person that can comment
Yeah.
on all this shit. So like maybe go to some sectors and listen to some experts on any of these specific topics, but anyone who's a generalist trying to like give insightful stuff on this, reporting the news like B-Check is doing, which I respect the hell out of because he's bringing it to you guys. He thinks it's important, but reporting on it and saying what he's hearing versus like people giving opinionated facts on it, you're going to find very few people that can actually do that and be well informed on all of these things. So, respect to UV check, but man, this stuff is it's just out of our control.
Yeah, I mean, I definitely take that. The way that I was speaking to you about it before is less that we have to provide the deep, insightful commentary and perfectly formed insight and opinions on some of this stuff. It's more like the market is absolutely crushed today. Let's make sure people have a reasonable handle on some of the factors based on some hopefully reputable sources of information, and then people can go and dive into those different bits that interest them the most and decide for themselves what weight they attach to each thing. So that's the intention for today's show in particular, especially after an absolute rout over the weekend, especially because it felt like there were so many different things happening. One of the other ones, in fact, let's get to the other one just after the Web3 snapshot to get you up to speed with everything else that has been happening in the space in the last 24 hours, because there's definitely another factor which I think is interesting, and which I think Bread will enjoy because at least there's a poly market line open for it.
Ayo. I got
Right.
liquidated in all those things. I got murked, so that's fun.
Right. From the snapshot pinned up top, this is the Web3 Roundup. Number one, CryptoPunk's floor approaches 50K with sales at around 20 ETH overnight. So the NFT price action is going down for the main headline collection. Number two, Morgan Stanley becomes the first major bank to approve Bitcoin for solicited sale to their clients. This happened towards the back end. I think it was late on Friday. I think that's really, really big news personally. But I
Now
guess
we're
it's got
talking.
drowned out a little bit versus all the other stuff.
Yeah, and I actually, so I listened. One thing I did this weekend is I listened to a couple of podcasts from like the creators of Bitwise and several of the
Mm,
ETF funds, like just talking about how they perceive the market, global, whatever. Like that's why maybe this is kind of like my brain just disconnects because they're earnestly talking about like, yeah, man, within the year, 100K Bitcoin seems total. Like obviously, like macro takes precedent over this stuff, but the general thought is just that there's so much good structural stuff happening within this space, and this is another sign of that. That yeah,
yeah.
man, it's hard to be down.
Yeah, nice shout out to the Bitwise team. I've listened to some of their interviews before as well. They speak really, really well on all of that stuff, and obviously they have a much closer handle on how the institutions are feeling about things because they are going around speaking to them all the time. So that's interesting to note. Next, Blast stablecoin USDB depegs to 0.94 cents but recovers to 0.99. Jupiter announces 3 billion token burn proposal passes, which means that token supply will be reduced by 30%. I think that's pretty big news too. On the more creative side, Zora announces a 1-year anniversary and creator earnings of $9.4 million. If you are a creator in the space and you have not checked out Zora, you probably need to at least know what's going on there. I know I'm having a
I want to
look
see
at,
how much Zora made during that time. That's what I want
well,
to look up.
probably the same amount, right? Because they take 50%. So
At
great,
least.
great business model. Mintify announces Ordinal keys as preparation for BTC Ordinals marketplace. Shout out to our NFT marketplace partner, Mintify, moving into the Ordinals game. And finally, Vitalik sells entire Nero bag for 100K. Love it when the founder of Ethereum wrecks a meme coin just for fun
What
on
was the
a
last one you
down
remember when you sent
weekend.
like was it Shib to
A charity,
The India charity, right?
yeah,
I actually saw they're one of the bigger treasuries on DeFi Llama still.
really
Yeah, they're like a top 20 treasury, like the
amazing,
India Recovery Fund. Yeah.
amazing. Love it. Look, we've been through the important factors. If you're joining us a little bit late, we've spoken about Jump liquidating their crypto positions. We've spoken about the Japanese yen situation. We've spoken about unemployment data and potential rate cuts from the States. We've spoken about the Iran situation. We've touched on it very briefly. Number five on my list, Brad, we're almost there now from the 5 or 6 important aspects that I kind of made a list of over the weekend. We're on to number 5 and 6, and we're going to end on maybe a personal reflection on how to personally manage these types of weekends. Number 5 was Kamala Harris. Her odds have, at least on some markets, very much improved. So, but they have not changed on poly market. So again, just to make people aware, this article was published in Forbes a few days ago. Actually, it's updated. Is this correct? I don't know. Did you maybe this is old, Brad? I haven't. I think basically Kamala's odds are increasing. I don't know
Yeah,
if this
fair.
article is exactly correct. Some are suggesting that she's taken the lead over Trump in election betting odds now, and I think that was
I've
on.
seen some of that on specific platforms. I think the general consensus, though, because they had a lot of comments on this stuff too, talking about the political headwinds of crypto and kind of where things go, and it's BTC a Trump coin now. Like generally, the thought is that no one knows what the F Kamala stands for at this point in time,
True.
and therefore this is basically just like the swing away from like the peak Donald euphoria after his assassination attempt. So like, is this material in that like the market actually believes it's going to be that way? I think it's kind of just like sobering up from how crazy everything got post Trump. I think the general sentiment that I picked up is that people believe Trump and the Republican Party is still like the crypto party in this sense, and that yes, you should try to make the inroads. Like there's that debate that we had last week, right? Where should we be nice to the Democrats and have them come out to I forget what the permissionless in Salt Lake City because like we want to make inroads there and have it be a bipartisan issue, or do we just hitch our wagon to Republican because we think that's a better forecast? I don't know, but the general sentiment I've heard is that yes, Kamala is swinging back, and yes, it's um, to the point of sometimes it flipping Trump, but mostly it's no one knows what she stands for, so it's kind of just like the pendulum swinging back after an intense Trump swing after,
Mm,
and they fumbled some shit too, right, in that time,
yeah.
but since his assassination attempt.
Okay. I think that's a fair assessment. Two final pieces before we close out for today. I think we've done a decent job of getting through all this stuff. Final, just interesting observation. And maybe this is pure observation rather than anything else. To see that Warren Buffett, this was a report that Berkshire Hathaway sold more than $75.5 billion worth of stock. This means that Berkshire Hathaway sold more stock last quarter than any other quarter in its entire history. Buffett is sitting on a record $277 billion of cash. To put this in perspective, Berkshire Hathaway now owns 4% of all treasury bills issued to the public. So that's a big move from Warren and the team. Good old Warren. And maybe I'll just link that to maybe the final question, Brad, for the day, which is more to do with look, I guess Warren Buffett's kind of positioning himself accordingly for whatever he thinks is playing out. Ovi had this tweet again on like, look, what do you do on this kind of weekend? He had a few pieces of advice. And then maybe I'll come to you to ask why you are able to be so stoic and calm in these particular moments. Ovi shared this advice, said, understand the hardest part about losing money is the shock factor and feeling frozen. How was I so dumb to lose all that money? What if? Sitting there not knowing what to do is the worst feeling ever. Number two, you got to have a plan of action because you want to feel like you can fix the situation. Number three, get a pen and paper, write down all your positions, how much you own, the percentage of your portfolio is. Number four, move away from your screens. Got to get away from the screens, in his opinion. Five, go through your positions, rank them all on a scale of 1 to 5, with 5 being maximum conviction and 1 being little conviction or a pure gamble. Number six, write out a list of trades you're going to do when you consolidate your low conviction ones into your high conviction positions. And number seven, think you'll probably feel better after you've gone through that process. Brad, that's one excellent trader's thoughts and reflections when it comes to days when I think a lot of people might be in, a troubling position. Maybe they were over leveraged. Maybe they're trying to figure out how they can salvage something from the situation or just be better positioned next time when something like this happens. What's your reflections as someone who's been in this market for a while now and is also very clearly able to stomach it in a very, very competent way? How do you think about these things?
For one, I think it's very good advice. I'm focusing on nine. Don't worry, things will always bounce back. And like to be honest, not all of them will. As someone who's been through this before, I remember back when the COVID crash happened and everything was going sideways. I very distinctly remember that moment of like, fuck, I like this is the moment everyone is maximally afraid. I should buy crypto. But then I remember looking at all my stuff and like, well, everything's down everywhere, so what's the point of rotating into crypto at this point in time? Had I done that, I would have, potentially bought 80 to $200 ETH, whatever it was. But my logic in my head was, which I had a lot of conviction with it at the time. My logic in my head was just, oh my God, like everything is down. Like now it's not a good time to trade. Like now my dollars are worth less, my stocks are worth less. Like, so what am I gaining if I do this? I should just stay in the
Mm,
position. And that actually worked out well. But had I deployed this method that he's talking about, where I like limited out my conviction plays, and like, yeah, maybe in that time, something that I had more conviction in, which is like, Ethereum at the time, like, had I known or identified to myself, like, I do have high conviction in this thing, and something else that went down a little bit less had, maybe I had less conviction in, but it was worth more, it held up better, whatever, and I rotated into Ethereum, might have been a good play at the time. I also could have went the other way, right? I could have rotated it all into Shiba Inu, Elon, Dogecoin at the time or whatever, and got nuked. Totally possible. I ended up sitting on my hands. It all ended up coming back because I'm not a big trader. I don't do these things, but I think yes, that is a good practice, especially doing it away from screens and like really centering yourself is probably a good move.
Mm.
So I endorse it. In the past, I did the sit and hold strategy because I don't get on typically a bunch of risky stuff. So my stuff did bounce back, but yeah.
I like it. I like it. I like the call out that ultimately the sitting down with a piece of paper and a pen is not the solution in and of itself, because it depends what you write down on the piece of paper. Like if you come up with a strategy that says go into Elon Dogecoin,
Bowden's the one.
Bowden is the one, he's going to come back. Like
Yeah.
you know, in the end, what you put on the piece of paper is as important as giving yourself the time to. I guess the thinking is by taking the time, you're at least giving yourself the opportunity to come up with a better
It's a
strategy
release
than the
valve,
one you're
is
coming
what
up
it
now.
is, right? Everyone's feeling pent up, like they're like, oh my God, I gotta do something, like something going crazy, or like they're feeling anxious. It's a release valve for getting that stuff out, getting your thoughts out, thinking you feel actionable, right?
Do you know what? Maybe we'll close on this. I saw this interesting quote earlier. I think it was attributed to Kobe, but I can't guarantee that. And it made me
Yeah,
think
it
about
was.
some of the
Yeah.
things I've been doing. Do you know what it is already?
I know what you're gonna say, I think.
It's okay. I've never seen this one before though, so I'd be interested to see if you've seen it. It was people tend to try to act. I can't remember exactly. I don't
You
want to
act
butcher
too
it.
quickly when you're trying to build wealth, and you move too
And too
slowly when you're trying
slowly
to
when you're
preserve
trying to
it.
protect it.
Yeah.
And that's exactly what I was thinking about, because I have exited actually. So the thing that I actually thought about doing, to your point about us having no idea, you know, Iran, Israel, like this is too big for us, right? There are certain technical things in the space which, although I have a working knowledge of, I've never professed to be like the perfect technical expert of things. So things like Athena, things like restaking in general. It's like, look, those things might all be fine, and maybe even you can go as far as say they're probably fine. But the thing is, I'm not technically astute enough to know perfectly that, like, look, this stuff under times of stress is going to work out perfectly. So for things like that, I started. It's actually a perfect example of that quote where it's like I wrote down on my to do list, oh, gotta exit some of these things, but that's not acting fast enough to protect your capital, right? Like it's not, when it comes to buying something, you put that on the to-do list and you're like, you go to the page, you start checking the price, you get the chart up and you're like, you're hovering on the buy trigger. But when it comes to protecting the capital, it's just like, oh yeah, maybe I'll do it later. And so that was actually a good reminder to me. Like, look, when it comes to protecting, just protect in this space. You have to do what you can to protect ASAP. The buy, you know, whether you buy at 51 the dip, whether you buy at 46 next week, you know,
Hmm.
I feel like the protection thing is just a bigger of a deal in this space.
For sure. For some pro tips right now in a dip like today, if you want to maintain your position in the US, there's no wash trading regulations. So you can simply sell out and buy back into the same asset within like whatever you're gonna take slippage, but you can book any tax losses right
I see.
now at this price. Say it dips 20-30%, book the
Yeah.
loss, and then you can get back into the same position because crypto doesn't have the same rules and regulations as stocks. So that's a little bit of
Interesting.
pro tip to take advantage of these moments.
Nice. Okay. Look, guys, I hope that was a helpful show. That is the end of the show. We've gone a little bit over, but as I said at the beginning, our objective is to try to give the headline points from some of the main factors of what's gone on in a very tumultuous weekend when it comes to price action. Although, as Brad said, the tech is still the same. If you like the tech, then we'll be here to talk about it again tomorrow. But we'll also talk about the price action too. Hope you enjoyed the show. Thank you to my legendary co-host Brad, and thank you for joining as always. Have a wonderful day. Hope some of the reflections were helpful. Hope you're all doing okay with the price kind of turning negative. But we'll be back tomorrow. Take care. Have a wonderful day. We will see you on the other side. Bye bye.